Everyone thinks a bank is a fortress of trust. They're wrong, some are just elaborate fronts. The year was 1972, and a new financial institution, the Bank of Credit and Commerce International, or BCCI, was founded by a Pakistani financier named Agha Hassan Abedi. From its humble beginnings in Pakistan, with significant backing from the ruler of Abu Dhabi, Sheikh Zayed bin Sultan Al Nahyan, BCCI was poised to become a global player. Its stated mission: to serve the developing world, a noble goal that masked a far darker ambition. BCCI grew with astonishing speed, planting branches in dozens of countries, from London to Luxembourg, from the Cayman Islands to Colombia. It cultivated an image of accessibility and innovation, particularly appealing to clients in parts of the world underserved by traditional Western banks. This rapid expansion, however, wasn't built on conventional banking principles. Instead, BCCI operated as a vast, interconnected shadow network, seemingly beyond the reach of any single regulatory body. It was a bank designed to circumvent scrutiny, to operate in the gray areas of international finance. This deliberate lack of transparency would become its most defining, and ultimately its most destructive, characteristic. By the 1980s, whispers began to circulate. Rumors of illicit activities, of vast sums of money moving through BCCI labyrinthine accounts, began to reach the ears of investigators. It wasn't just speculation. Specific details started to emerge, painting a picture of a bank deeply embedded in the criminal underworld. One of the earliest and most shocking revelations connected BCCI directly to drug trafficking. The Medellin cartel, led by the infamous Pablo Escobar, was reportedly using BCCI to launder billions of dollars in drug profits. Imagine a structure, gossamer thin, floating between branches, yet strong enough to snare a buzzing insect. BCCI was that structure, but for illicit cash. In 1988, a U.S. Customs investigation, dubbed Operation Sea Chase, culminated in the indictment of BCCI and several of its officers for money laundering. This was not a small-time operation. It involved dozens of arrests and exposed the scale of BCCI complicity. Yet, even with these indictments, the full depth of the scandal remained largely hidden. The cartel connection was just one thread in a much larger tapestry of deceit. BCCI became known as the Bank of Crooks and Criminals, for good reason. Its client list allegedly included arms dealers, corrupt politicians, intelligence agencies, and even terrorists. It offered a discreet, no-questions-asked service for those operating outside the law. Beyond explicit criminal enterprise, BCCI engaged in massive fraud, manipulating its own accounts to hide billions in losses. They created a complex web of shell companies and offshore entities, making it nearly impossible for auditors to trace the true flow of funds. It was a shell game on a global scale. The bank essentially ran parallel books, one set for regulators and another, far more accurate and damning, for its inner circle. This allowed them to project an image of profitability and stability, attracting new deposits and investments, while internally the institution was bleeding money. The scale of the fraud was breathtaking. Estimates later suggested that BCCI had lost billions of dollars, far more than its reported capital. This wasn't merely mismanagement. It was an institutionalized system of deception designed to enrich a select few and facilitate global illicit trade. Regulatory agencies, particularly the Bank of England and the U.S. Federal Reserve, were increasingly aware of BCCI problems. But the bank's intricate, multinational structure made investigation and enforcement incredibly difficult. Each country's regulators had limited jurisdiction, allowing BCCI to slip through the cracks. The bank also employed sophisticated lobbying efforts and cultivated relationships with powerful political figures across the globe. This network of influence provided a degree of protection, allowing BCCI to continue its operations long after warning signs became glaringly obvious. When we think of Roman roads, grand legions marching in perfect formation often come to mind. BCCI built its own roads, but for illicit traffic. Protected by powerful allies, the tide began to turn in 1990 when a report by the accounting firm Price Waterhouse, commissioned by the Bank of England, detailed the massive fraud and widespread misconduct within BCCI. This report, initially confidential, was the smoking gun that regulators needed. On July 5, 1991, regulators in several countries, led by the Bank of England, simultaneously moved to shut down BCCI operations worldwide. It was a coordinated global effort, a testament to the bank's pervasive reach and the severity of its crimes. The closure sent shockwaves through the financial world. Depositors in dozens of countries, many of them ordinary citizens and small businesses, lost their life savings overnight. Governments and international organizations also held funds with BCCI. The human cost of the scandal was immense, far beyond the abstract numbers of financial fraud. The subsequent investigations were sprawling and complex, revealing even more layers of corruption. Key figures, including Agha Hassan Abedi, faced charges. Abedi, however, avoided extradition to the U.S. due to ill health, dying in Pakistan in 1995. Other executives received prison sentences. The BCCI scandal also implicated prominent individuals and institutions, casting a shadow over parts of the U.S. political establishment. Former U.S. Defense Secretary Clark Clifford and his partner Robert Altman, who ran a U.S. bank partially owned by BCCI, were indicted on charges related to concealing BCCI ownership. You step out of a warm shower, reach for the mirror, and it's gone. A blank, misty canvas. That's how swiftly reputations vanished. While they were later acquitted of some of the most serious charges, the scandal underscored the deep penetration of BCCI influence into legitimate spheres of power. It showed that even the most respected figures could be entangled in its web of illicit dealings, willingly or unwillingly. The fallout from BCCI led to significant reforms in international banking regulations. Regulators realized the critical need for better cooperation across borders and more stringent oversight of multinational financial institutions. The concept of a single consolidated supervisor gained traction. The scandal also highlighted the dangers of offshore banking havens and the ease with which criminals could exploit jurisdictional loopholes. It forced a reckoning with the systemic vulnerabilities that allowed a bank like BCCI to flourish for so long, operating above and beyond the law. What began as an ambitious venture to serve the developing world metastasized into one of the largest and most complex financial frauds in history. The Bank of Credit and Commerce International became a symbol of corporate greed, regulatory failure, and the seductive power of illicit money. Its collapse served as a stark warning. The financial system, for all its sophistication, remains vulnerable to those intent on exploiting its weaknesses. The memory of BCCI continues to underscore the constant battle against financial crime and the ever-present need for vigilance. Explore another tale of high-stakes deception and its devastating consequences in our next deep dive.